Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Dario de Martino, M&A Partner and Co-Head of Fintech and Blockchain at Allen & Overy. We're going to discuss the current regulation around the digital asset space and some newer legislation that's been introduced. Dario, it's great to have you with us. As always, welcome to Trade Talks.
Pleasure to be here. Thank you.
All right, you got it. Let's talk about last week with the Ripple ruling. It answered some, but left a lot of unanswered questions. Which uncertainties remain in the aftermath of the Ripple ruling?
Yes, Judge Torres of the Southern District of New York dealt a potentially significant blow to the SEC's crypto regulatory and enforcement program when she rejected the SEC's categorical approach. The SEC's crypto program relies on the proposition that virtually every token is in and of itself a security, regardless of the facts, circumstances, and economic realities, and various ways in which these tokens are purchased and sold. Judge Torres disagreed and instead examined the totality of circumstances surrounding the defendant's four categories of transactions under the Howey test. In Howey, the Supreme Court held that the investments amount to investment contracts and therefore securities when they involve each of the following prongs: an investment of money in a common enterprise with an expectation of profits derived from the efforts of others. So Judge Torres examined four categories. With respect to the first one, institutional sales, meaning sales directly to sophisticated institutional counterparties, think venture capital funds pursuant to written contracts, Judge Torres agreed with the SEC in that these transactions satisfied all prongs of the Howey test and therefore are investment contracts. And the judge focused on the third prong of the Howey test, meaning institutional buyers reasonably expected that Ripple would use the capital it received from its sales to improve the XRP ecosystem and thereby increase the price of XRP. With respect to the so-called programmatic sales, meaning anonymous sales of XRP to the public through digital asset trading platforms, Judge Torres disagreed with the SEC in that there is no reasonable expectation of profits derived from the efforts of others, and therefore these are not investment contracts because these are blind bid-ask transactions, and the purchaser could have not known if their money went to Ripple or any other seller of XRP, which is a surprising outcome. With respect to the third category, meaning distributions to employees and third-party contractors as compensation for services, Judge Torres also disagreed with the SEC and held that these are not investment contracts because there's no investment of money. And finally, with respect to the fourth category, individual sales by Larson and Garlinghouse to Ripple's affiliates on digital asset trading platforms, a programmatic buyer, Judge Torres also disagreed with the SEC in a manner similar to Ripple's programmatic sales. So to your question about uncertainties, Judge Torres' order is based on specific facts and circumstances. For example, the court noted that Ripple's programmatic sales represented less than 1% of XRP global trades. So other market participants have to be very careful because they may not have the benefit of these specific facts in their matters, which could swing a court's opinion in another direction.
So it sounds like it's almost a case of regulation by enforcement. What do you find are the limits of regulating by enforcement?
Look, regulation by enforcement does not provide the regulatory clarity that market participants and virtually every single client of ours so desperately need. And as a result, it stifles innovation in the crypto industry as market participants face high legal risks, costs, burdens. And even though it is expected that courts around the country will give considerable weight to this opinion, it is not binding on other courts within the Southern District of New York or the U.S. Court of Appeals for the Second Circuit or other federal courts across the country. That said, if read to limit the SEC's jurisdiction to the initial bilateral sale of a digital asset between an issuer and an institutional investor, then Judge Torres' decision would significantly curtail the scope of the SEC's jurisdiction over this industry.
Well, Dario, in the immediate aftermath, right, of this decision, the SEC is claiming victory, the digital asset space is claiming success. Who do you think deserves the credit?
That's a great question. Look, market participants, I think, should keep watching whether the SEC or Ripple or both may appeal. The SEC, in a subsequent filing against the crypto company Terraform Labs and its co-founder, said that the Torres ruling creates an artificial distinction between the expectations of sophisticated institutional buyers and retail investors. And so that signals that the SEC is considering an appeal. So market participants should be very wary that this order does not represent the final say on these issues. However, if the district court's position on programmatic sales is adopted with respect to secondary market activity, then this principle may ultimately be favorable in claims against digital asset exchanges, such as Coinbase, which have been alleged to have operated unlicensed securities exchanges. So ultimately, those exchanges may be the winner here.
So Judge Torres' opinion is, in fact, drawing criticism, saying it protects the institutional investors, but not so much for secondary market purchasers on retail trading platforms. How do you see this development becoming resolved?
That's true, and that's something that I would agree with. But I also think that this is a key policy question for Congress, not so much a legal or regulatory question. Our federal securities and commodities laws just need to be updated to account for the emergence of crypto and this new asset class. And this is a job for our representatives in Congress, not the courts and not our regulators.
What are some of the most promising crypto bills that have been that are currently pending in Congress, and why do you think?
Well, there have been over 200 bills introduced in Congress to regulate crypto, but I think that two stand out, at least to me. One, the Loomis Gillibrand Responsible Financial Innovation Act, which was recently revised to reflect feedback from regulatory stakeholders, including the SEC and the CFTC. And that would, among other things, I'm going to give you sort of 3 points that I think are important. Number one, that would require all crypto asset exchanges to register with the CFTC. Number two, it would establish new penalties related to illicit finance, such as willfully violating money laundering laws. And three, it would impose mandatory segregation of customers' assets and third-party custody requirements. The other one that I would mention, last month, Patrick McHenry, chairman of the House Financial Services Committee, the committee that oversees the SEC, and Glenn Thompson, chairman of the House Committee on Agriculture, meaning the committee that oversees the CFTC, released a draft of legislation. And I'll give you 3 quick points. According to this proposal, it's called the Digital Asset Market Structure Proposal. It would grant the CFTC exclusive jurisdiction over digital commodity, cash, and spot markets. It would also exempt certain types of digital asset sales from the application of U.S. federal securities laws. And third, it would exclude digital commodities and payment stablecoins from the definition of a securities under the U.S. securities laws.
Well, I guess the key question is, what are the consequences for the current lack of comprehensive regulatory framework in the U.S. for the digital asset space?
Yeah, look, several U.S. businesses unfortunately have left or are in the process of re-domiciling outside the U.S. That's one of the most common questions that I get in my practice. So that's obviously an unfortunate outcome. But also, even if a token is not a security, as Judge Torres mentioned in her order, the project teams may still have information that is not readily available to the general public, creating information asymmetries that ultimately hurt retail purchasers. So I really hope that Congress will act swiftly so we can keep crypto innovation in the United States, but also protect crypto retail consumers.
All right, Dario, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.